We started off talking about what are student loans and how do you apply for them. So now let's talk about the different types of student loans that are available. So primarily, these are divided into federal loans and private loans. We're going to spend most of our time on the federal loans, but it probably would be useful for you to just keep that in mind that there's two main types. So now the federal loans are the most common, and they're obviously, or maybe not so obviously, offered by the federal government. So these include direct loans, and these can be subsidized or unsubsidized. So what is this whole subsidized or unsubsidized thing about? Well, we're talking about the interest, and this is a major point, subsidized. This is a major point that I remember when I was in school, I didn't pay attention to. And what happens with a subsidized loan is that the government is paying the interest on your loan while you're in school and whenever your loan is deferred. So subsidizing your education means they're offsetting some of the cost. So subsidized loans are available only to undergraduate students who demonstrate that they have some financial need. And the amount is capped just to cover your financial need, and that's determined by your FAFSA that we talked about in the last video. Now, with an unsubsidized loan, you're responsible for any interest that accrues when you're in school and even afterwards. And if you're in school for several years, maybe you decide to go on to grad school, those interest payments or that interest that accrues could be substantial. So unsubsidized loans are available to any undergraduate or graduate student because remember the subsidized loans are the preferred ones because the government offsets some of the costs. So they're not open to everyone. But the amount of the unsubsidized loan is determined by still the cost of attendance at your school and any other aid that you're receiving. And sometimes we call these Stafford loans. So our next type of federal student loan is a Direct Plus loan. And these loans are available to graduate or professional students, and they're through the Department of Education. And these are a little bit different. They're going to require a credit check and some decent credit history. And so typically, they are not something that a freshman in college is going to take out because they typically don't have a credit history. And so it's intended to cover any expenses that your other aid does not cover. So you would want to go for the direct loan first and then the plus loan on top of that. Next, we have a Perkins, but the Perkins I'm going to put with an asterisk because actually it has expired. So probably no need to spend a lot of time talking about that one. Now, some things that you should know about federal loans. So I'm still talking about federal loans, but not just the types of loans. You usually don't need a cosigner. Usually. You usually don't need a credit check unless you're talking about plus. And the interest rates are fixed. So fixed interest rates means that they stay the same over the life of your loan. And lastly, under certain circumstances, the interest is tax deductible. Now, you won't care about that until you actually start paying the loans, but if your income is within a certain level, that could be a big tax savings for you. Now let's go over and talk about the private loans. Again, federal loans are going to be your best option, and we especially like the direct loans, and especially the subsidized direct loans. But if you still need more money, or for whatever reason you can't qualify for the federal loans, then private loans are available, but they're not going to offer you as much flexibility. And so these loans come from lenders that are not affiliated with the government, like a bank or a credit union, or even your school or a state organization. So the amount you can take out and the options for repayment are going to be up to the lender because they're not regulated by the government. So some things that you need to know. So here on this private side, I'm not going to list out the different loans because it just depends on the lender. But the things that you need to know are you might have to start paying this loans back while you're still in school. Big difference between the private and the federal. Next, they may require credit check and a cosigner. Sometimes the interest rate is not regulated, so they may not even tell you the interest rate until after you apply. So you may want to shop around and try to get the best rate because, again, that interest rate depends on the lender and not the government. Also, remember we said that federal interest rates are fixed. These may be variable. And so that could mean if interest rates go up, the rate on your loan goes up. Why do you care about this? And we'll talk about interest rates in more detail a little bit later, but you care because that's going to make your payments increase. And lastly, the interest on these might not be tax deductible. So when you put these side by side like we have here, you can see there's a huge difference between federal loans and private loans. So when you're looking for college money, you want to think about it in 3 ways. Number one, you want to look for free money. Free money, I guess I'll put it in quotation marks. Free money would be grants and things that you don't have to pay back. Then number 2 would be federal loans because they have all these benefits like being tax deductible, not requiring a cosign or a credit check most of the time. And then the private loans or the private money would probably be your last choice. Certainly of these 3. So those are some things to keep in mind when you're looking for student loans. So this is it for what we needed to talk about with regard to what are student loans. In our next video, we'll go on and talk about just how much money you can borrow. But we've kind of touched on that already, that it's going to depend on 2 things. The results of your FAFSA, your free application for federal student aid, and also the cost of attendance. Cost of attendance is a number that's calculated by the school that you want to go to. So it includes things like tuition, room and board, supplies, fees, and things like that. So how much is it going to cost? How much can you contribute to that cost? And that gives it some indication of your need. And then you start looking at your funding options. Some will be based on how much you need, some will be based on your credit. So next time we will talk about how much you can borrow in more detail.